Welcome to the official Flinder podcast, where hosts Alastair Barlow and Luke Streeter interview successful startup and scale-up CEOs, founders and business leaders. Here you'll find tips and tricks as well as advice on overcoming challenges to help you grow. And now your hosts, Alastair Barlow and Luke Streeter.
Today we're joined in the studio by Ignacio Bachiller, who is the CEO of London, Spain and New York-based Fever. Fever is an app that helps you discover the best things to do right now in your chosen city by delivering a curated list of the most exciting events and other activities specifically tailored for you. You can use the Fever app in London, New York, Madrid, Barcelona and many other cities. Welcome, Ignacio.
Hi, thanks a lot for having me.
Thank you for coming in, Ignacio. So I think if we could just start off by just hearing a couple minutes about yourself, then more importantly, about what Fever do and where you're going.
Sure. So a bit about my background. I'm an engineer by career. So I studied in the US, studied at MIT. After that, became a consultant working at McKinsey. At that point, after a couple months at McKinsey, I thought that there was a much more exciting project taking place, which was Fever, to which I got introduced through a mutual friend and investor early on, in the very early stages, and initially joined as COO and head of expansion, and later down the line was appointed CEO almost 2 years ago.
And about Fever, what's in your words, what do Fever do and what's the aim of Fever?
Yeah, so I think Alastair described it pretty well. I mean, right now we're the leading entertainment discovery platform. So there's the main objective that Fever tries to accomplish, on a very high level, is to convert online traffic, be it on Facebook or on any social media, and convert that online traffic to offline footfall at venues and events taking place in the cities that we're in, right? So as an example, we cover, we have the app, which is a transactional platform where users can go and, be inspired to find out what content is available and transactionable within their city. This ranges all the way from, theater, underground, nightlife, restaurants, pop-ups, pop-up cinemas, anything offline, basically anything you can do outside of home. And our objective is to help people, find what is best for them. We have a recommendation algorithm on our app that basically, takes into account every detail of the user behavior within our platform and tries to, in turn, suggest the best events for them. One very important thing for us, of course, is the reach that we have on social media. So basically, as I mentioned before, you must be familiar with Secret London, Secret NYC, Madrid Secreto, Barcelona Secreto. These are all Fever's local media networks. As I mentioned, a lot of people spend time on Facebook. We're not trying to compete with Facebook when it comes to where people are spending time. So what we do is we try to be on social media, which is when people are willing to essentially make decisions of what they do offline, and we capture them, through our posts, through the stories that we're creating on Secret London and the other pages, which are always talking about local entertainment, and we take that interest and that traffic and convert it to transactions to ultimately increase footfall at the venues that are our clients.
How long's Fever been going?
So Fever's been going now for around 3.5 years. So initially we started off in Spain, which is where all our tech team is right now. I'd say most of around 60% of the team is in Spain. So we have overall, all our tech team is there, our engineering team, our ops team and admin team. So we started off with Spain as a test market. We started off in Madrid and Barcelona. After which, we raised our seed round in Spain, and this was in early 2014. Then late 2014, early 2015, after being in Barcelona and Madrid for some time and having, significant traction, we raised our Series A, with Accel Partners, which who back very important companies such as Spotify, Facebook, and many more. And after raising our Series A, of course, we wanted to take the next step and go ahead and launch in other key markets to be able to show essentially that we don't only just work in Spain, right? So what we did then is we said, okay, which are the key markets that are that have a lot of entertainment and where there's a lot of upside to be gained. And so we launched in New York, and then we launched in London. London's launch was very, very successful. In fact, with the creation of Secret London, we were soon the largest local entertainment prescriber in the city, larger than all the other companies in the entertainment space. And towards the end of 2015, raised another round of financing.
And you mentioned just then London was very successful. What does success look like then? What is the aim and goal at the moment? What defines success for you?
Success for investors is always disrupting the market. So we launched London. There's a lot of, as you're aware, London, when it comes to entertainment, there's a lot of noise in the entertainment market in London. So what was success for us is essentially becoming the largest entertainment prescriber on social media, which we got through Secret London, and also becoming the largest player when it comes to transactions occurring in the entertainment discovery space.
How are you measuring that versus competition? So you obviously can measure yourself, but how are you measuring it against others to know that you are truly disrupting and being the leader in that area?
Facebook dashboard tools, very easy to measure where you're at in terms of reach, and also in terms of activity on the app. There's a lot of tools out there that allow you to see how you compare with the competition.
Yeah. Just going back to, is it 3.5 years you said Fever's been going?
Yes.
So what does it, maybe some of the stark contrast between now and when you joined Fever 3.5 years ago, what are some of the key kind of transformations that you've seen?
Yeah, so Fever started 3.5 years ago. I joined around 2.5 years ago when we were just closing the Series Seed. So a lot of things have changed. Well, first of all, size of the team has grown significantly. We're now more than 65 employees. And also, of course, there's a lot of, I wouldn't say that the product has pivoted massively. So we're still offering the same service as we were offering back then, which is marketing. We're a marketing tool for venues and anything happening in a city, because what we're doing essentially is driving footfall and getting eyeballs on content, right? So in terms of product and product offering, it hasn't changed. Of course, what's changed a lot is the efficiency with which we work, the spend, and the profitability, right? So at the beginning, when you launch a company, and I think that's also changed quite a bit in the last months or in the last year. So at the beginning, you're not that much focusing on the importance of profitability, whereas now that's one of the key things to look at if you're looking to raise a growth equity round or actually build a solid business, is to have a very clear path towards profitability. And that's one of the things that we've been focusing on a lot in the last year.
And have your investors helped you focus on that, or is that something as a natural evolution of the business you would always have focused on, or is it something that's really coming from the investors?
Yeah, I mean, of course, there's always peer pressure, right? So you always want to be looking at what's going on in the market, what investors are looking for. Of course, Fever is a startup, and we're a loss-making company, and we don't have an intention to become a profit-making company yet. What we do know is that it's important to show that you can become profitable at some point. So what we're very close to being cash flow positive in all existing markets, very, very close. In fact, probably this month. And that's one of the key things that investors are looking for. But it's not only current investors are saying, hey, you guys need to do this. It's also we're capable of understanding the market and knowing where we need to be if we want to go ahead and launch and continue raising capital under good terms.
So a few things I heard is that one, obviously, it spawned out from Spain. Then you came to London, and I heard it was a very successful launch. And then you went to New York.
New York first, then London.
Oh, sorry, New York first, then London. Which is the city or location that's going best for you?
So I think one of the things that we've been focusing on in the last year is to ensure that all three markets get to profitability at the same point. So I'd say all markets are doing just as well in terms of fastest growing. Yeah, London is probably one of the fastest growing markets just because there's so much going on here. But Madrid and Barcelona and New York continue to grow tremendously, and the idea is to continue to invest in those markets and also launch probably another market in the US and another market here in Europe as well.
Are you allowed to give us a bit of an insight as to which those markets are, those locations?
So Paris is looking like a big contender.
Yeah. How did you go about the location analysis for Paris and the one other in the US?
Yeah, so to be honest, it's quite simple. What we do is we look at the major cities in the entertainment space. One of the key things is going to be population and, of course, average spend. So any city that is similar to London in that aspect is going to be a great fit. And technically, Fever works in any city, so we're obviously a city-by-city marketplace. So any city that has entertainment availability and has people who've got time and money to spend on entertainment are cities where Fever should work. So right now, we're at a point where we're simply making decisions based on what are the best cities that we can launch now that are going to give us the fastest and best return.
And as a business model, that's fantastic. You just replicate in every city, as you say, that's got entertainment business.
Exactly. Yeah, it's a very simple. The playbook is quite straightforward. Of course, every city that we launch, we become more efficient due to the learnings that we get from previous experiences. We become more efficient and we get faster at launching a market, but we know exactly what we want a market to look like 6 months after launch, 12 months after launch, and 18 months after launch.
So on that point, you've done multiple cities in Spain. You've done New York, you've done London. What would you take to Paris as this is what we've learned, our consolidated learning from those cities that we've launched in already?
So I think one of the main things that we learned in London, for example, was the importance of not only having the transactional platform, but also having, so in this case, the app, right, or the mobile web version of the app, which is where people go to the final step of the funnel, which is booking. What we've learned that's super, super important, and again, in startups, a lot of things happen a bit by chance. So Secret London, for example, was a media network that we launched almost exclusively at the beginning to reduce acquisition costs. However, we then immediately became the largest entertainment prescriber in the city, larger than all the other big players, who I'm not going to name, but all the other traditional entertainment players. So one thing that we've learned is the importance of not only having the content on the platform for people to go ahead and book, but also on being the let's say the prescription voice or the entertainment go-to where people whom people trust, and that people and basically that it gets people to understand what's going on in their city and can suggest what are the best events going on, so that people actually then go ahead and transact. So it's not enough to only have a tech platform like a booking platform. So anyone can create a ticketing platform. Anyone can create a website with a big fat search bar where you go in and look for something and you book it, because that's more of a price war of I offer the lowest fees. What isn't easy is what we've done, which is how do I build a platform that is going to drive additional traffic that was not initially going to go to your event, right? And for that, you need to have a strong voice in the city that people will listen to, that is capable of driving traffic as we see, or basically capable of recommending things and having people listen to those and going ahead and booking, right? So you need to be higher up in the funnel, essentially.
How do you do that? How do you do that in a brand new city with a brand new language?
Huh?
How do you do that in a brand new city with a brand new language?
Yeah, well, we're in multiple cities now, and the model's been replicated and working. So it's just a matter of replicating, getting the media network out there, and getting the right content on the app, and using the learnings that we've seen from current markets. It's all about data, to be honest. So although it may seem that we spend a lot of time generating content on social media, it's actually all about the data that we obtain, the consumer data that we obtain through our transactional platform that we then use for people for the content that we drive on social media. So that's essentially the secret sauce, right? Which is how do we use data, consumer data from the app or from our users to get the right content on social media so that people interact with it, engage with it, and ultimately go to the content that we're talking about.
The investments massive bit, which we'll come on to a bit more detail separately. Outside of that, what would you say for the company's perspective has been kind of the biggest challenge in your 2.5 years at the company?
The biggest challenge in the past?
Yeah.
So there's a lot of challenges, of course. Challenges range all the way from figuring out how to replicate in a way that is going to be profitable and scalable. So yeah, you can make one city work, but if you've invested millions in a city and you're not going to get payback ever, well, that's not really worth much. So figuring out how to make the unit economics work, how to get that recurring consumer behavior so that you're getting, relevant paybacks. All those require a ton of thought going into how to be efficient at marketing, how to scale the content. So content this is a marketplace, right? So on one side you've got the users. Once you figure out, how to acquire users at a good cost so that you can get realistic paybacks and CACs, which by the way in itself is a huge is a huge challenge, and you need to have great people such as our CMO, for example, who figured that out after trialing a lot. You also need to make sure that you've got the right content on the app, and there are several tools that you can use to make sure that whatever you get on the app is actually going to perform well. But at the beginning, it's a lot of hit or miss, right? And you need to start to get to know your audience. You need to start to know, how they're going to react to certain content. And above all is how do you solve the tech problem of once you do have a lot of content, how do I segment that content to my different audience, right? So some people, are going to want to see underground events on their feed initially. Other people are going to want to see West End theater shows. So having that tech recommendation algorithm requires a lot of investment in team and a lot of, R&I into actually making sure that you get the right algorithm. And that's something that we're continually improving, of course.
I'm sure you're not going to reveal what your CAC is, obviously, but and a CEO is probably never happy with what the level, the cost of his customer acquisition. But broadly, between the cities that you're in, have you found that it's plateaued to the same level, or are you seeing different cities it's a different value, or what's that look like?
So I would say I can't say much, but I would say that it's relatively similar overall, because London is more expensive to acquire a user, but then they also spend more money. Yeah. So net, there's not a huge difference.
So the ratios, CAC to LTV, are probably similar across
Yes.
the different territories,
Yeah.
different locations.
Appreciate, again, as you can't disclose too much on them, but what other metrics do you look at then as well? So
above all, what we look at is how many people are we reaching per month, unique people. So just so you get an idea, in London we're reaching over 4.5 million people per week, unique people. So that's more than half of the population per London seeing our content every single week. So that's, one of the most relevant metrics, because that's the top of the funnel. And once you've got that large audience numbers, you begin to be able to do a lot of things to convert that into actually, into real transactions. So unique reach is super important. Transactions, of course, because you want to make sure that reach is converting into bookings and transactions. And right now, what's super important for us to track is, of course, the revenue that we're generating on a monthly basis.
And you mentioned before, though, that the focus hasn't been on profitability. So is actually then going forward, is it that switch over now?
So it hasn't been like a hard switch over, but in the last year and a bit, I think it's very important to at some point be able to get to the stage where you say, okay, I've got a great product, I've got great metrics. Now, how do I show that this could be $1 billion company? And yeah, there are companies, like Facebook or Snapchat, who initially focus purely on other metrics, but sooner or later you're going to have to focus on profitability. And that's one thing that for me was very important, a year ago, is to start saying, okay, how do we now make sure that this is not only a business with a lot of traction, but that we can actually generate money, which is going to make it much more, much more attractive for a new investment round or an acquisition in the future, or it's just going to make it easier for us to continue growing faster by burning less cash per month if we're making cash as well.
I wanted to ask you a bit more about your personal journey as well. So in your intro, you said that you're an engineer by education, you worked for McKinsey's, then you joined as COO, and now you're CEO. So that's quite a big delta between the two. What's that look like for you?
I would just say, sounds like McKinsey wasn't all that it made out to me if you're only there for 2 months.
Yeah, no. So overall, like 4 months or something like that. But no, I mean, to be honest, I was super happy at McKinsey. Of course, it's in a company like that, you work very hard, you work long hours, but you also get to meet a lot of super interesting companies. You work with great people, so I was actually super happy. So for me, it wasn't a decision of I want to leave McKinsey, where can I go now? It was just, hey, this opportunity has been presented to me, and I'm just gonna take a leap of faith and do it. So there wasn't. I would have stayed there happily. I mean, if you do well, they pay for your MBA. So it was also an opportunity cost for me to leave, right? But I think that I'm really happy with the decision I made.
Was it a hard one to make, going from a corporate? We've obviously got some experience of that, but going from a corporate to a company in its infancy.
So I mean, the decision wasn't that hard. I mean, it was hard to make because of, as I mentioned, I was leaving a lot on the table because there I had it was a great job, and I knew that if I was continue to do well, I would then go and do my MBA, and as a career path, being there is great, right? Just like it is being in any other well-established corporate. But I didn't think about it too much. Maybe I didn't think about it enough, but it seems that it turned out pretty well for now. I just said, look, there's a super interesting opportunity, and these opportunities don't always arise when you want them to arise, so it's better to just take it when you see that it's interesting and you have a gut feeling that it's the right time, and you go. Of course, if it would have happened a year later, maybe it would have been, it would have been different, or I wouldn't have taken it for other personal reasons, or, you start getting married and you have kids and this and that. I think that you always need to take these opportunities when they see them.
And what was it like going from probably a very organised world to what I can imagine less organised? I wouldn't say chaotic, but a less organised world where pretty much everybody has to do everything to get the job done.
Yeah, I mean.
So was it a shock to you?
Yeah, I mean, I think it was, of course, a bit of a shock, but I didn't expect any different. Like, I knew that when I was going to join a startup with few employees doing a lot of things, you had. People had job titles, but they were doing that and so many other things, right? So it was more a matter of how can we be more efficient at our jobs, and how can we, make the departments more efficient at what they're doing. Of course, there's always a bit of chaos that you can quickly, when you come from a corporate, you can always say, okay, look, these are the best practices I've seen. One of the big sort of mistakes at the beginning, I think, that I made was to assume that just by putting a PowerPoint together, you were going to be able to change how things worked. That's clearly not the case. You need to actually get in there, understand, the different stakeholders, understand why. This is like a river, right? If things are being done in a certain way, it's because it's the path of less resistance. So what can you do to make sure that you change that path and make it more efficient, so that people themselves will want to do it that way? If you start imposing, or forcing certain ways of working in a startup, it's not going to work. The rules don't work like in a corporate where it's you do this, despite it being less efficient, you need to do it this way, and people abide by the rules, because if not, there are bigger consequences. In a startup, people are always going to end up doing things in the most efficient way, and that goes all the way from operations and, to sales, for example. If they have a bonus and that bonus is based on X and Y, they're going to do anything it takes to optimize on that, right? So you need to make sure that you're setting the right targets, that you're setting the right bonuses, and that you set and that you know where you're going. I think direction is super important in those cases.
And that is actually so important for growth and your employees actually wanting to make things more efficient and almost giving them ownership. So as the company's grown over the years, how do you not lose that and not become a big corporate? You said you're at 60-something employees at the moment. So at what point are you going to become a corporate and then lose what's exciting about a growing business?
Yeah, that's a good question. I mean, of course, I think we're nowhere near to being a corporate. I think there are good things about a corporate as well, which is you start trying to be more organized, you start to have clear responsibilities. The problem with having a lot of people doing a lot of things in a bit of a chaotic way is that nobody is truly responsible for anything. So one of the important things is to make sure that people are accountable and responsible for what they're doing, but also make sure that you're keeping, I think the most important thing of a startup is to have people understand that the limit to what they're doing, like they're setting their own limits. So, you want to encourage people to be entrepreneurial within their own roles. So, you want the operations department to be entrepreneurial. You want the sales department to be entrepreneurial. And that's something you don't want to lose. And you don't lose it by encouraging people to take risks and to suggest things and to be constantly innovating. Because when you're growing, if you're a corporate and you don't need to grow by a crazy amount per month, then it's fine to keep things as is. But in a startup, if you need to grow, 20% month over month, people need to make risky decisions so that they can have higher impact. So you need to constantly encourage that, and that's super important.
And you always learn quite a lot from failures or going wrong and making those wrong decisions. Is how you bounce back. You got kind of any good examples of where perhaps in hindsight is the wrong decision or a really hard decision?
I mean, I think so. For a lot of wrong decisions are made during when you're growing. So, for example, it's not as much wrong decisions because typically you're doing things that work in other companies, but they just are maybe not right for you, right? So you say, okay, so let's do, let's in marketing, for example, and I think this is a super typical mistake that companies make when they raise money, which is, okay, I want to put an ad on the tube. I just raised a couple million. Let's just make
spend most
how
of it on
effective is that?
Well, I've never done it, and I probably will not do it. I think you need to do that once you're super established, and it's something to keep the machine going, not to get people to start using your app, right? There are, we tried a lot of things for downloads, for example, but you soon realize that anything that you can't track, where you don't know what your return is or you don't know what your costs are, is a disaster because it's a black hole, right?
No idea on the data.
Exactly. So it's for my ego, it's very cool to have an ad on the tube, and all my friends are going to be, oh, you're on the tube, but for the results of the company, it's probably crappy, right? Yeah.
So I think you mentioned, I can't remember how many employees when you joined the company, a handful, half a dozen or so?
Approximately, yeah. Around a dozen.
So there's now about 65 employees between Spain, New York and London. The company's obviously grown significantly. You've gone from seed funding at the time when you joined, Series A, and maybe some other multiple funding rounds since then. What's been the biggest challenge for you in that time, in those 3.5 years, as CEO?
So fundraising is always an interesting one. I think any CEO is nobody's going to say, yeah, it's super easy to fundraise. That's always a difficult one, just because you need to constantly understand what's going on in the market, and because venture capitals are always going to base their decisions on, not just, of course, on the company, on the potential, but also on, what's that sector doing, like, or how is the monetization in this sector, or do we need to start looking at profitability? So I think keeping up with the expectations of the investors is very important, and that's something that's quite challenging, which is when you start fundraising, knowing what they're looking for or what the market is looking for and adapting to it, because that changes a lot, right? So maybe 2.5 years ago, when I started there, it was all about, just user growth, and nobody cared about monetization. And then suddenly, a year later, it's like, oh shit, wait, people start caring about monetization now. So we better figure out how to do that properly. So that's a challenge, because you're doing one thing and then suddenly you realize, wait, that's actually, that by itself is not enough. Now I need to start focusing also on doing this, right? So the market's constantly changing in that sense. That's one challenge. And then another big challenge that I see is hiring. Hiring is always a difficult thing. So when you're a startup, you've got limited resources, and with those resources, you need to have the best people. So it's two things that are quite complicated to
balance.
Exactly, to
Financial
balance.
balance.
So finding people who are super, super ambitious, very, very motivated, it's not easy, right? Because when you're a startup and you just raised Series A, and you want to hire someone who in their job is earning probably 2 times what you can offer. The challenge is, how do I convince this person of the vision of the company, of where we want to be in 12 months, in 2 years, in 5 years, so that they get convinced that this is something where they can have a big impact, where they're going to have a lot of leadership. That's typically how what people like about a startup, is having more responsibility and leadership and impact than what they do in their current roles. But of course, there's always a trade-off. Like you can hire a consultant, an investment banker, or someone from a corporate, but from the initial points of this conversation that they're not going to be earning the same. So how do you get them as excited as you are about the business is a challenge.
And have you found any one of those geographies harder than others or easier than others that you're in at the moment to recruit?
So what we did very well is to know that, is to set up our tech team in Spain. So Spain has great resources for engineering, very, very good engineering schools and very, very good engineers.
Is that where you went to school?
No.
All right.
I went to MIT in the US. But I know from experience that Spanish engineers are just as good. And of course, Spain is a cheaper market. Living in Spain is cheaper than living in London. So one of the key things that we, I think, have done very well is to have an engineering team in Spain, because they're just as good as anywhere else, but it's more affordable.
Cost effective.
Right. And then, in London, there's a lot of people you can hire, of course. And in New York as well, there's a lot of very talented people. So I think in all markets, it's relatively easy to hire. But of course, you need to take into account the costs. And so if you want to be cost efficient, then you need to start thinking about, where you hire what role.
So your tech team's based in Spain, and then London and the US, London and New York, that's marketing and partnerships, is it?
Mostly, yes.
Yeah.
So mostly. That's probably how it's split, yeah.
And so we do want to get on to talk about funding, don't we? But very quickly, before we move on to that, just like to pick up on, what does the typical day, because we were talking off air before about where you've been this week, where you're going this week. What's a typical day of a CEO of a, no, you're not a tech company, you're a marketing service company, but a fast growth company in that kind of arena. What's a typical day of a CEO look like?
So every week I typically travel, right? So maybe I'll take a flight on a Monday morning, to one of our offices, to Madrid, or I'll go to New York. So typically I go to Madrid every week for some days. So I'll get there, typically have several internal meetings until lunchtime. So, you have your management meetings, and you have meetings with the different teams. Then maybe some interviews. I still spend a lot of time recruiting. I think it's very important. I spend at least 30-40% of my time recruiting
To get the culture of the company still right.
Yeah, exactly. And also, that's super important. I think every CEO should spend a very decent time recruiting. And then, I like to, when I'm not fundraising, so assuming that this is a non-fundraise part of the year, I will spend, time, I'll go out with the sales team and I'll meet some big partners, and I will sit down with the engineering team and look at the pipeline. I'll sit down with the head of product and with our CMO, and we'll think about product. We typically have maybe a 2-hour session every couple days on product, for example, right? And then more meetings in an afternoon with some clients, some more existing clients and potential clients to know, if the existing ones are happy, and then also the new ones to see how we can consistently improve the pitch. So yesterday, for example, I was in Barcelona and I met with, 3 or 4 different potential clients.
So you said you spend a lot of time investing, and when you're out of it, when you're in investment mode, how do you actually first before you've had any investors on board. How do you find that first investor? How, if someone's listening and they want to get investment, how do you actually find?
So I'd
an
backtrack
investment?
even further. How do you know how much you want to get, how much investment you want to get?
Yep.
And then lead into your question, mate.
Well, first you create a business plan, of course.
Perfect answer.
So you create a business plan and you say, okay, you do a bit of a longer term analysis. Okay, where do I want to be in 3 years? And then, to be honest, anything further than 6 months is probably just pies in the sky. So you go back and you look at the first 6 months and you say, what do I need to finance the ambitions of the company for the first 6 to 12 months? You start thinking about the team, you think about, what marketing investment, you use some benchmarking, you use some comps, and basically then you go out to the market, you pitch your idea, you get interest from certain investors, and then, depending on the conditions that the different ones provide, you start balancing, right? And you say, okay, well, typically you go out that's also something that changes with the market, but typically you go out knowing, say, that I want to raise between a seed round of 200K to 600K or something like that, or in our case it was larger, but more or less a range. But then for example, what happened with us in the seed in the seed round is you get more interest than maybe initially what you were looking for, and you're not going to say no to the money if it's under good conditions, because it's just going to increase your runway, right? And then when you go for Series A, to be honest, I think when you go to meet investors for Series A, you don't really go with, I want exactly 3 million or 4 million or 5 million. Sometimes people go looking for 2 and they end up getting 6. Like getting more, as long as the conditions are right, it's fine. It's more about talking to the different investors, seeing how they value the business and how aggressive they want to be and how, what sort of deal you can get with them. And based on that, you may raise, because maybe it's better sometimes to raise a bit less at a higher valuation than raise more at a lower valuation, of course.
And what's your view on the balance between going out and finding an investor who will just put the cash up and they're giving you the cash versus an investor that can open the right doors and they're in a similar industry, etc.? What's your view on that?
The perfect example is our Series A. If you want a good investor like Excel, you pay the price of having Excel, versus maybe getting the money from someone else that maybe isn't going to open as many doors in the future. Although the conditions may be better, you're probably better off going with the other deal.
The intangible aspects of it you've got to also bring into the equation.
Super important.
Yeah.
Super important.
What did you learn from the first couple of rounds of fundraising that you did? What were the kind of key things you kind of took from that either you took or you will take to your next rounds of funding, or that you would share and give any kind of wannabe entrepreneurs that are looking to raise their Series A?
I think it's important to always have, an open mind of talking to a series of interesting investors from different markets. Sometimes people only go out and say, I want a strategic investor from this area, or I only want a investor who's going to invest a certain amount of money. I think it's important to keep an open mind, and more than the fund, make sure that you're talking to the right partner, or that partner is actually strongly believes in the business, and that you're going to have their backing going forward. Because again, it's not only about the money, but it's about what that fund or partner is going to provide or bring to the table. The first round is only the beginning, right? So it's very important to decide who is essentially getting into like a marriage, right? Like who you're getting married to at the beginning, and how are they going to help you in the next years. So I'd say my recommendation would be, don't think about, make sure that you're not only trying to optimize on cash that you're raising and terms, but actually think about, who not only the fund, but who is a partner that's going to work with you, and what are they going to be looking at.
I think it's very evident from the way you use the word partner that it is working well for you rather than using the word investor. So that's a sign that it's going well.
Yeah. I guess so.
Okay, we're going to have to wrap up very quickly. Should we do the 5 quick fire questions first of all?
Yep.
All right, so Ignacio, what 3 bits of information can't you live without?
In terms of reporting?
Any 3 bits of information.
I would say download costs, user transactions, and revenue.
Nice. Okay, second one for you then. If you weren't the CEO of Fever, what would you be doing?
Probably building another company.
What type?
Probably similar space.
Okay, cool. What's your favorite online tool?
Slack.
Now we're out of corporates. We love Slack as well.
Right. So 2 more for you. So next one. What one piece of advice would you give your younger self?
That's a good question. Probably do what I did, which is if you see a good opportunity, jump and go for it.
So a bit like Nike, just do it, right?
Yeah.
It's a great logo.
Especially when you're young.
Yeah, and then lastly, are you getting 8 hours sleep each night?
No, definitely not.
How many do you get?
Probably 5 or 6.
Ouch.
That's low.
All right. Well, Ignacio, thank you so much for joining us on the podcast. And
Yeah, great. Thanks for having me.
Yeah, we hope
fantastic to get you in.
yeah, thank you very much. Where can people find out more information about you or Fever?
Well, so we have our website, feverup.com, but I think the best way to do it is check out Secret London on Facebook or download Fever on the App Store or on the Play Store.
Excellent. Thanks very much. If you have any feedback, thoughts, comments, or have an interesting business story or journey to share, please get in touch. You can find us at
flindereffect.com.
or you can reach out to us on social media, Instagram, Facebook, or Twitter at Flinder Effect. Or you can sign up to our newsletter at flindereffect.com. However, this podcast made it into your ears. Unfortunately, it didn't make it quite onto the screen this time, but we hope you enjoyed it. If you did, please leave us a 5-star review on iTunes and share with your friends and colleagues. Thanks for listening, and we'll see you next time.
Cheers. Thank you.
Thank you very much.